Hi friends, welcome to Hemant YouTube channel. Before starting the video, if you like my channel, please subscribe, share and thank you. Let's enter into the topic. Today we are going to learn the events, that is adjusting event and non-adjusting event. Next, what every event is according to Indestin, every event is divided into adjusting event or non-adjusting event. What is the meaning of adjusting event? It has to adjusted in the financial statements. That is, it has to adjust in the P&L and the balance sheet. And what is non-adjusting event? It should not adjust in the financial statement. That means it is not going to shown in P&L and the financial statements. So, why it is why what happens if it is adjusting events? It is going to change our profit and balance sheet. So, what is the meaning? Why we are considering material as adjusting event? That is nothing but why we are we are doing reporting period. We are doing 31st March audit. That means we are going to prepare financial. We are going to give 31st March financial statements and events between 15th May. You think approval of financial statement? Why we have to give these events in the financial statements? Why we have to adjust? Because they are material. They are material, and because of that, many investors are going to change their decision. Let, for example, we have seen that Sri Lankan country, and their business is going to shut down. Nearly 60 crores debtors is not coming. In previous video we have seen that. So if this information is seen by the investor, he is going to change his decision. That means is this is vital. So next, for this, Index 10 divides into two: adjusting events and non-adjusting events. Next, what is the meaning of adjusting events? Adjusting events is nothing but conditions exist on the balance sheet date. For example, you have prepared the financial statements up to 31st March 2021, and in that one data is there. He's not giving money from 1 year, but he has done business with us for 20 years. You are getting some doubt that he's not going to give, because in previous 20 years, within 10 to 20 days he is going to give money, but it became 1 year and his financial position is also not nice. So you have created the provision. Before approval of financial statements on 30th April, he has become insolvent. Whether this to be adjusted or not? Yes, because it is conditions existing on the balance sheet date. Here conditions means information. Information that it is probably going to be. That means not probable, it is going to be. It may. It may. That means it is chances are there. So chances are there. You have information is there that it is going to be. So this is considered as adjusting events. Let us see an example. I said bad debt data, and second, a case is filed by ABC Limited and GST. Okay, between ABC Limited and GST. Okay, on claiming exemption, ABC Limited is saying that we should claim some expenditure. GST department is saying that no, you have to not claim for the year 2011 to 2012. And suddenly the court order came on 15th April 2012 that ABC Limited should not claim any exemption, and GST department won. Whether in ABC Limited financial statements, whether it should be an adjusting event or non-adjusting event. Yes, it is an adjusting event, because ABC Limited has an information that a case is going to occur. So an event after the reporting date is an adjusting event if it provides evidence of a condition exists at a reporting date. Here this condition is satisfied. Quote approved received after the reporting date but before the financial statements are approved provides the evidence of liability existing at the end of reporting period. Therefore, the event will be considered as adjusting event. Second, what is the meaning of non-adjusting events? Non-adjusting event means the event has occurred but that are not going to disclose in the financial statements. Why? Because condition are not exist at the balance sheet date. For example, we have one factory. In that one factory, one room has been destroyed. One room has been destroyed, and that small amount and no damage has occurred, and no person has died. Whether this is going to be disclosed? No, because on 31st March, while you are preparing the financial statement, you have any information. This occurred on 15th April. On 31st March, you know that a fire is going to occur. No condition exists. No, this is nothing but non-adjusting event. So it should not be adjusted in the financial statements. So example is factory fire after the balance sheet date. Next, data. A person is there. He is a good person and is paying the regularly an amount, and 50 crores he has to pay to us. Not 50 crores, 50 lakhs we shall take, because 50 crores is a material amount, so 50 lakhs it is. And we consider good. He will pay on 31st March, we consider it as good data. But suddenly, due to some reasons, he has become insolvent on 30th April. Whether we have to consider it as an adjusting event? No, because condition exists, information is there that he is going to be a good person, he is going to pay, and any information is there that he will not going to pay, so this is considered as non-adjusting event. Examples of adjusting events: the settlement of a court case after the reporting date, bankruptcy of the customer, sale of inventory after the reporting date may give evidence about net realizable value at the end of reporting period. This we are going to discuss. And determination after the reporting date of amount of profit sharing or bonus payment, the discovery of fraud or error that the financial statement is incorrect. Examples of non-adjusting event: decline in market value of investment. For example, you invested 10 crores in Reliance and suddenly it has fallen to 5 crores. Market value has fallen. You know that investment always carried at a cost. So it is non-adjusting event. Market value is going to increase or decrease. It is non-adjusting event. Next, major business combination. Some business combination has occurred. It is non-adjusting event. Next, announcement of plan to discontinue an operation. See, they said that we are going to discontinue an operation. That means we are not going to continue any operations. 31st March. If it is material, it is correct. If it is material, we have to disclose in the financial statement. It is considered as non-adjusting event. And if you like my video, please subscribe, share, and thank you.